Good evening, everyone. This is Jeanette at TradeThirsty doing a quick mic check. Mic check. I might do a mic check. How about that? Y'all give me a J in the chat box for JNet because I'm here for TradeThirsty tonight. We are here tonight with a really good friend of mine, Roger Scott. Now to preempt this, Hubert Senders and I, if you haven't been to one of these events before, you may not know, so I'm going to tell you. We built TradeThirsty as a platform to bring in really great traders, really great ideas, really great, not just traders, but also entrepreneurs, people that were out there in the grind every day making money with their own money. And Roger's one of those guys. He and I met several years back at a conference where we were learning about technology, like how to make the technology better for all of our members. And just sitting down with Roger and listening to how he trades and what his history was, I was like, okay, we need to spend some more time together. And since then, we've had him on TradeThirsty just a couple of times, but he agreed this week to come and spend tonight with us. And so I'm so thankful that he took the night out to come spend it. And I just want to remind you guys, here at TradeThirsty, we're a big family, and so we expect you all to respect Roger's time. He's here at no charge to you, and did it as a gimme to me, as just part of our relationship. And so I appreciate him so much for doing that. We are recording tonight for our own purposes, but we're not sharing the recording, so it's up to you to stick around and listen to what Roger has to say. Now, I'm interested in what Roger has to say because when I looked at all the information that was going into tonight's workshop, it was very clear to me that he's got his finger on this market and on what's going to happen with the election. And I've seen the information that he's going to share, and I'm so pumped to hear him deliver it to you tonight. So Roger, let's give you a quick mic check, and I'm going to make it where you can share your screen as well.
Well, thank you. Can you hear me okay?
I can hear you perfect. Can everybody else hear Roger? Roger?
Can't get anyone, nobody in the chat. Don't
yeah,
be shy.
look, there they are. He said they got the 4x4. All right. They're coming in now, Roger.
I can't see the chat. It's not coming. I don't see the people writing anything.
Okay, so
Maybe I will. Maybe I will.
In the questions, you see the questions box?
Yes, let me go there. I was in the chat. Let me go to the questions box.
Yes.
That's it.
I always say chat box, and I forget that it's really the questions box.
Perfect.
Okay,
All right, I'm gonna share my screen.
Okay. And I'm gonna wait to see if I can see it. All right.
Can you see it okay?
I can see it.
Perfect.
Okay, all right. So if everybody else can see it, all right. The time here is 7:03 Eastern. I'm in Central, but I like to speak in Eastern. So 7:03 Eastern, kicking off pretty much right on time like we promised. Roger, the mic and the panel is yours. You guys give it up for my good friend, Roger Scott.
Perfect. Now, can you guys see me okay? I know you can hear me, but can you also see me? Because I can't see myself, so I don't know if you guys can see me. Yes. All right. Well, I'm glad somebody could see me. Perfect. All right. Let me just minimize this. And here's the deal. I am really, really happy to be here. I'm excited to be here. I'm going to have a fun time with you guys. For those of you who don't know me, we're going to get to know each other well. And I am very, very appreciative to thank for TradeThirsty for giving me the opportunity to be here. So here's the deal. Here's how I work. Here's how I operate. I'm going to go ahead and close the Q&A box, which I thought was the chat box. And I'm going to minimize all this so I can give you guys a lot of value. Then when we're done, I'm going to go ahead and answer all of your questions. Do we have a deal? Do we have a deal? Does that work for everyone? All right, perfect. Thank you, Doug. Thank you, Ron. Thank you, Dee. Thank you, David. All right, let me do this and let's begin. Oh, now I can see myself. Gee, now everyone, now I can see myself. Let me minimize this because then all I'll be able to see is this. All right, perfect. Let's begin.
I think you're gonna have to unshare. You're gonna have to reshare and share just your PowerPoint, or turn your. Do you know how to turn? Are you gonna leave your video up?
I just want I prefer to just share my PowerPoint.
Okay. All right. So you need to stop sharing.
Let me do that.
Go to your share thing and click stop sharing. Now can you turn your webcam off?
Yes, I can. Let me do that. Yes.
Start over. All right, now go back to sharing and select your PowerPoint. Bada bing, I see it. That's all I got is your PowerPoint.
Thank you so much. Thank you so much. I appreciate it.
No problem, no problem. Have at it.
Thanks. All right, guys. So let's get into what we're going to hear today. I'm going to give you the breakdown of the top performing trades of 2019, how we caught them, and how we're going to catch them again in 2020. There's no mystery here, but I'm going to explain all of it to you. The three key dynamics driving the global markets right now, how they'll play out in 2020, and during the election cycle, which is key, which is what everybody wants to know. You'll find out where the S&P 500 is heading over the next 11 months and which strategies will benefit the most. We got a lot to cover today. Let's continue this. My top 5 predictions for the economy with specific instructions on how to trade them. I'll also give you my number 1 sector to watch for 2020 elections. If you don't have this in your portfolio, you're making a big mistake and you're missing out. And I'll share with you which sector you must avoid. It's one of the largest ones in the global economy. You definitely want to be involved. We're not done yet. You'll also discover my top stock for 2020. It's in a red hot sector with enormous upside potential. And again, there's a lot of info. You may want to write down what I've got to say today. I'll also share the poison pill, the stock you must avoid next year. You don't want this one in your account no matter what. Finally, I'll lay out how playing the markets for 2020 will help you maximize profits. So we got a lot of stuff to share with you, a lot to talk about. Let's get into it right now. Please, please, please take lots of notes. You really should take notes. That's the only way you're going to be able to keep up with all this information, because this is going to be a lot of actionable trading content. This is not going to be fluff. I'm going to give you guys a lot of value here. All right. So let's do a little quick recap. 2019, we delivered 398 winning trades, totaling 16,486% return. Now that's nothing to laugh at. That's really, really good. For example, top 5 trades, AMD, 287%. Quadruple, triple-digit gains, not out of the realm of possibility. Something very simple, something acceptable, something we do commonly. XLE, we had last year 31% gain in the S&P 500, but we managed to make on a short trade 346%. And again, on a short trade in a raging strong market. 5, quadruple digit gains, 486% on 5. Again, and keep in mind, these trades didn't take 2 years. They didn't take 3 years. They took literally 5 to 10 days. So again, we're not talking about holding positions for years. This is a leveraged bond position, all right? Again, this is no correlation. Actually, it's inversely correlated to the stock market, 587%, all in 10 trading sessions. TECD, one of the best ones last year, 606%. These are all actual signals, actual trades. These are trades you could have made money on. You could have taken $1,000, turned it into $6,060, all in one trade lasting 10 days without having to sit there, watch the screen, watch the computer, figure out what to do. It's all there for you. We nailed major predictions. We called the bottom of the 2018 when during the holidays, the stock market was crashing. We had the 3 biggest down days in history. And what happened? Nothing. I told everyone who would listen to me, the market is oversold. It's not going to continue doing this much longer. And what happened? We bounced back and we continued to make new highs. So today I'll reveal my number 1 prediction for this year's election cycle. You got to see this. You got to hear this. It's really good. You'll hear my number 1 sector, even my number 1 stock. All right. Plus the number 1 strategy to maximize your profits in the next 11 months, because you know what? This year is going to be tricky. It's going to be different. We've got a lot of things on the table. So pay attention. Before I get into all of this, let me talk a little bit about myself. I'm going to make this brief. I know a lot of you have already heard of me, know me. I've been on CNBC, Fox Money Show, featured on Wealth 365. You name it, I've been around the block a few times. But I originally never, ever intended to get into the markets. I applied to law school. I lived in Los Angeles. I simply moved to Florida just about a year and a half ago, maybe 2 years ago. Time flies. But I lived in California. A friend of mine, when I was about 23 years old, took me to Las Vegas. For some reason, he wanted to open up a stock brokerage account in Las Vegas. I have no idea why he was doing that, but I went with him. He told me all about how to make money from stocks fluctuating, the overall big picture. I never ever in a million years thought something like that was possible. I came from a blue collar family. Nobody in my family invested money or traded stocks. I did not come from that entourage lifestyle that you saw in the HBO movies. I came from my first car was a 74 Volvo. Okay, so I didn't live the high lifestyle. Anyhow, I went to law school, but I knew from early on that I was going to get into the markets. And as soon as I graduated law school, I got into this business and I never looked back. And about a decade later, about 12 years later, to be honest with you, I drove on that same road and I made over $1 million while literally I was in the back of an Escalade, falling asleep, driving through Death Valley to Las Vegas. I made over $1 million 12 years later on the exact same road using the same system we're going to talk about today. And the same system we're going to be talking about today helped me turn $20 million in investor capital into over $740 million in just a decade. The same strategy helped me join forces and start a hedge fund with one of the top economists. Actually, the senior economist in the White House right now was my partner in a hedge fund. So again, I've worked with the best of them, and the same strategies that we're going to talk about today helped me secure a job working and managing money for one of the top 10 wealthiest families on earth. All in all, I've been around the block. I've been doing this for 26 years. About 2 weeks ago, it's been actually 26 years, and I've had the privilege of starting with zero and running my hedge fund up to about $900 million. So I've been around the block. I've been around the neighborhood. I know what real trading is all about, and I can help you achieve success. I really can. So let's talk about what we've got in store today. Let's talk about the big picture. 5 predictions for 2020 election cycle. Again, folks, please get a piece of paper, take a pen, write this down. You're going to get a lot of valuable, actionable information that will help you gain an unfair advantage in the market. So, prediction number 1. We're looking at a major bull market. We've been in the longest bull market in history, but we're not at the top. I've got really good reasons, and a lot of people are not really talking about them. There's 3 dynamics driving this market right now. We're going to cover each and every one of them, and they're all highly important to what's coming up next. First, the Federal Reserve is making major quantitative easing. All right, they're making major purchases in bonds. It's called quantitative easing. Let me give you a little background. Back in 2008, President Obama and Janet Yellen, who was the head of the Fed, looked at each other and they said, if we don't rescue the markets, we're going to be in deep doo-doo, okay? Not only will the real estate market crash, but the financial markets will crash. What did they do? They started pouring money, borrowing money from the Fed, pouring money into the bond market, all right? When that happened, it gave markets huge liquidity. Now, look at this chart very carefully. Anytime the chart is above zero, the blue line is above zero, that means Fed is pouring money into the economy. Now, look at the dates. They started in 2008 and they ended in 2014. And look at what happened in 2020, the fourth quarter, which is what's happening right now. They're doing it again. $68 billion of bond till April. Now, let me show you something interesting. This is facts. This is not my theory. This is not opinion. Write this down. This is good information. This is eye-opening. Now, since 2008, the global stock market was worth $34 trillion. That's how much the US stock market is worth right now. In 2014, when they were done with their little spending spree, the global stock market was worth $69 trillion. All right. It hasn't grown since then. It's still worth between 68 and 70 trillion dollars. What does that mean? That means when the blue line goes to zero, stock markets don't get much liquidity. So we went during this little spending fiasco, we went from global markets being worth $34 trillion to $69 trillion, and they're doing it again. Look all the way to the right. They're doing it again. That's going to keep bond prices low, and that's going to keep interest rates low, bond prices hefty. I'm sorry, I keep saying bonds and interest rates. Interest rates and bonds are inverse of each other. So when interest rates stay low, bonds rise. So they're trying to buy bonds, keep interest rates low, to keep liquidity in the market and to keep the markets healthy. All right. They're doing that because of President Trump. He's putting a lot of pressure on the Fed. And no, they're not independent. So with Feds buying bonds, interest rates will remain low and liquidity will remain in the market. And that means the stock market will go higher. That's a big, big factor that nobody seems to be talking about, but it happens to be the biggest pink elephant in the room. Now, corporate earnings. Corporate earnings have been about 73% EPS better than expectations. Revenues about 60% better. It's about 73% of the companies reporting this quarter are outperforming Wall Street. All right. So what does that mean for us? Well, it's not a big deal. It actually isn't that great at all. You know why? Because about a month and a half ago, when analysts started reporting, they started talking about numbers being high, and then they started beating them down. So as long as the numbers beat expectations, which have been beaten to death, we should be okay. But that's not important. What's important is next quarter is the first quarter in 2 years that we're expecting double-digit growth, EPS and revenue, and that's huge. Goldman Sachs calling for 10% in 2020. That's the first time they've said that in a while. If you guys think it's a coincidence, it's not. Morgan Stanley, 11% in 2020. And the ultra-conservative Bloomberg, 11% plus in 2020. That's the first time in years that that's happening. And remember, markets always discount everything that's known, and they appraise everything that's coming up new, and this is coming up new, and this is why the market is on a huge bullish rampage. So profits have always been a key driver of stock prices. Third, this is huge. This is really, really big. People don't realize how big this is. 5G is going to start new industries. If we didn't have 4G, we wouldn't have Netflix. If we didn't have 4G, we wouldn't have a lot of the web services we have right now. So 5G it's like the internet all over again. It's huge. Self-driving cars, artificial intelligence, virtual gaming, all of this is going to be brought on by 5G. Now, keep in mind, as I mentioned, the U.S. stock market is worth $34 trillion. 5G is set to unleash $12.3 trillion in new activity. Think about it. The entire U.S. stock market is worth $34 trillion. This is huge. That's a third. All right. So this is a big, big thing. The 2.7 trillion rollout begins this year all over the country. And again, this is not a upgraded internet. This is not a means of making your internet a little faster. That's not what this is. This is about making your internet 100 times faster, not so you can browse New York, not so you can watch my broadcasts in a better quality, so that you could do other things online, so you can have more virtual type of activity, so that virtual reality can finally begin. So we're talking a new era in technology being unleashed. This will unlock everything. And I mean everything you can imagine. Internet of Things, self-driving cars, you name it, it'll do it. So this is big, real, real big. With more liquidity flooding the markets, we can expect much, much higher asset prices. There's no doubt about that. So projection for the S&P just based on conservative earning estimates. Assuming we don't go over the top line, assuming we don't do nothing crazy happens, all right? Just a very simple anticipation, 9 to 11% should be easy. Not a pie in the sky, very simple, effortlessly, all right? Actually, it'll probably happen before the third quarter, in my opinion. So current value of the Dow Jones, and again, this is data from maybe a few days ago, so it may be off by maybe 50 or 100 points or 200. I'm not exactly sure, but it should be fairly accurate. So again, will we go up 10%? Probably. There's probably a 30% chance, 30 to 50% chance that we're going to go somewhere between 31,000 and 33,000. Somewhere between 30 and 50 chance. Will we go down substantially? No, I don't think so. I think the odds of it is very, very small. I think there's much higher odds of us going higher than going lower, especially with the Fed data, especially with the economy And if Trump gets reelected, forget about it. And remember, markets are always anticipating everything ahead of time. Prediction number 2, small caps. Again, please keep in mind, because small caps, it's small caps, something people don't realize about small caps, they're a lot more sensitive to the economy. So let me give you a little history. When President Trump announced that we were going to have a trade war with China, okay, what we saw was small caps going into a major hibernation period. I don't want to call it a bear market because they didn't really go down. They just didn't do anything for about a year. Now, markets have 2 trends. I know you're going to tell me, no, Roger, they don't. They have 5 trends, the Gann wave, Elliott wave, Gann lines, all that crap. It's a bunch of nonsense. I've managed a lot of money and I've backtested every strategy, and I've only been able to find 2 trends. You know which ones? When markets go sideways and then they go up and down. That's it. Now, here's a rule of thumb. The longer markets stay in one phase or cycle, the better the odds they'll enter a powerful cycle, the different cycle. So in other words, if the market goes sideways for a year or 2, the odds are the ensuing bull or bear market, whichever it comes, will be powerful. In other words, the vertical trend will be very, very strong. Doesn't tell you which way it's going to go. Similarly, if the market's been trending for a very long time, the odds are very strong that the market's going to enter a congestion range, which means we're going to go into a hibernation stage. Now, typically, small caps have a correlation to the overall stock market of about 98.5%, but it didn't happen in 2019. Why did it not happen in 2019? I'll explain it to you. Because 2019 was all about China and US tariffs. What companies are more impacted by tariffs, large companies or small companies? Smaller companies, of course, they're more impacted by everything. They're more vulnerable. If the example I love to use is Johnson & Johnson. If Johnson & Johnson, something happens with one product, they've got 99 others. But if you're talking about a small cap company, one that has 5 products or 3 products or services, and it's being driven by something that's happening in China, you're going to get stuck. And that's what happened to small caps. But as soon as China and US entered phase 1, this is the range bound cycle I was talking about. S&P was making new highs. The Russell 2000, no soup. It was going sideways and sideways. And you know what happened as soon as Trump and China said, we're going to have an agreement. We're going to be good. First of all, you stopped hearing about the trade war about a month ago. And I was anticipating it was going to happen before the election, by the way, because we were getting very, very close to China having the upper hand on Trump and impacting our economy. It didn't happen. Trump made a deal. Very smart that he did it way before the major election began. But anyhow, the small caps, remember, they're more speculative. The more speculative the stock, the more it'll go up and the more it will go down. It's more reactive than a blue chip. It's smaller, it's more nimble. There's less market cap. It's more gamble-like, speculative. Gamble, I don't mean gamble, I mean gamble-like. It's more speculative. People use it to trade versus invest. Like Johnson & Johnson or Caterpillar, for example, where people can hold them for decades, or Coca-Cola. Warren Buffett still probably holds the shares that he bought when he was 40 years old, but we don't talk about that. All right, so finally, the last month and a half, small caps have started outperforming the S&P 500, and I believe that's going to continue, and that's going to give the overall market a lot of strength that it was missing in 2019. So we're going to expect an explosive catch-up to catapult the Russell. The Russell 2000 tracks the small caps, smaller stocks, not microchip stocks, smaller stocks that are already doing prime time but have not reached the fame or the notoriety of Amazon or Netflix. But these stocks have 2 billion market cap and so forth. So again, I'm expecting small caps to, again, supersede and on a relative strength basis, outperform the S&P 500 and give the overall market much needed support. Value on the small caps, currently they're about 1650. The fact that we'll go about 15-20% on average, small caps gain 8 times more than large caps on an individual trade size. By the way, just keep that in mind. So 30% we're going to hit 2000, 50% we're going to hit 1900, and 10% we're going to hit 1425. And as I said, folks, please write this stuff down. There's some really good info here. These are very important price milestones. So prediction number 3, volatility is set to spike. So volatility has been trading near historic lows. Now, when I say volatility, what do I mean exactly by that? Well, I'm talking about the implied volatility on the S&P 500. The at-the-money options on the S&P 500s tell us how fearful or how complacent the market is. For example, if the VIX, the VIX gives us the implied volatility levels on the S&P 500 in real time. If the VIX levels stay below 20, that means markets are fairly complacent. If they get above 20, that means markets are scared. Participants trading the market are scared. We've been having very low VIX levels because markets have been rather complacent. Stocks have been making brand new highs. Things have been good. But I believe we've got Iran, we've got this coronavirus, we've got elections, we've got a lot of unforeseeability on the table. And unforeseeability breeds fear. And because markets are getting a little fearful, I believe we're going to see a little more volatility to the upside, which will make option more volatile and option premium more expensive, but it'll also keep volatility on the upper edge of the range, which will make the market as a whole a bit more difficult to trade. So it's posed to spike. So reasons, again, coronavirus, global economy, elections, trade war. There's a lot of question marks. There's a lot of factors driving the market, which again will explain why I'm being nimble and why I'm doing what I'm doing right now. So target, I believe there's going to be about an 80% chance VIX will be at 20. It's currently at about 10, 12, 14. 20 is fear level. Markets will become more fearful. Whether they go to 30 will probably depend on how vulnerable the overall market will be and the Fed will begin raising rates. I don't think that'll happen, but I do believe we'll hit 20. And again, folks, please, please, please write this down, and I'll save some time before we end to do a Q&A session. So prediction number 4, bonds price to decline. Let me explain to you why. And again, I think I might have confused you in the beginning. I hope I didn't, but bonds and interest rates trade inverse to each other. All right, they trade completely inverse to each other. So if bonds go down, interest rates go up. If bond prices go down, interest rates go up. If interest rates go up, bonds go down. So just keep that in mind, and I'll explain to you why. The Federal Reserve has been lowering rates, and they said we're done, finished, kaput, never again. No, they never said never again, but they said the other day, Jerome Powell said, economy is growing substantially. The GDP is at 2.1%. There's really no reason to lower rates, all right? And here's the problem. Pay attention to these dates. I've got something important for you. I want you to pay attention to this. This is big. This is going to affect your mortgage payments if you have adjustable rates. Look at when the Fed made their moves last year. Look at the dates, all right? So every time the Fed cuts rates, right, they cut interest rates, that means interest rates go down. That means bonds are supposed to go up, right? That's just how it works. I didn't make the rules, so don't look at me, but look at the dates, all right? Summer, winter, end of the year. Now, normally, that would drive bond yield down and bond prices up. So bonds should be moving higher, 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 higher. Well, it's not happening. Look at this. Now, first time we announced it, the first time we were like around right here when we saw this big rally in the beginning of the red line that's going horizontally on the left side. And then look at what happened every time subsequently. Nothing. Even this Iran war, even the coronavirus, bonds are no longer moving higher. That's the Fed. That's the market telling us that we don't think the Fed is going to lower rates anymore. All right. So that means bonds should go lower, not higher, but lower. The last 2 interest rates have not been able to push bonds higher. That's never, ever happened before. That's when we had the beginning of that cross yield curve that everyone was talking about, signals of bear market. I don't think that's true. And even when it does signal it, it's about 3 years in the coming. But the bottom line is bonds should move lower, not higher. And here's the interesting thing. Bonds should decline. Now, this is the TLT. TLT is the ETF that tracks the long bond. All right. That means if you don't want to trade the 30-year bond futures contract or the 10-year bond futures contract, you can just trade the TLT with a stockbroker. And I'm expecting the levels to go down. We're about 144 right now. I'm expecting a 30 to 50% of us going between 130 and 111. Now, here's the interesting thing about this. I don't know if you've been looking at the gold market, but bonds and gold have been correlated. They've been extremely, extremely correlated. All right, gold's been flirting with 1600 for a while now. And we've seen all sorts of stuff, the impeachment, Iran, energy prices moving down sharply, and nothing's been able to cause it to really skyrocket. And again, gold and bonds have been tiptoeing with each other now for a while. So I'm not expecting a major breakout. Now, many, many analysts are calling for a significant breakout in 2020, possibly to 2000. For example, Barron's, gold to surge in 2020. CNN, 5 key reasons why gold price is set to skyrocket. The Street, gold will rise by 6.9% in 2020. I'm not seeing it. Not even close. Not even close. I'm actually seeing a decline in gold prices. Both gold and bonds are highly correlated. If bonds drop, gold will drop too. So now, chance of a major recession, GDP's at 2.1%. Unemployment, 55-year low. Retail sales, multi-year high. Housing starts, historic highs. Institutional allocation, only increasing, as I showed you by the amount of liquidity entering the market earlier today. Global economy, it's only getting stronger. As a matter of fact, China just said earlier this morning, they're going to start putting more money into the market, creating more liquidity because of the coronavirus, which is very, very, very good news. So, bonus prediction. Now, pay attention, pay close attention. You're not going to get this information for free in most places. I'm doing this because this TradeThirsty thing is great. It's giving people what they need to start investing on the right foot and outperform the market. So let's talk about this today. All right. We're going to see the market's going to be a lot more nimble this year. If volatility rises, we've got election, it's going to be trickier. So let me show you something interesting. Look at the S&P 500. The S&P 500 is broken down into 10 major sectors. All right, there's 10 major sectors in the S&P 500. We got retail, technology, utilities, consumer discretionary, consumer staples, so forth and so forth. So look at the S&P 500 Infotech. And remember, there's 500 stocks, there's 10 sectors, they're broken down, so you've got 40 to 60 stocks in each one, give or take. Now, imagine you could take the S&P 500 apart and you can dissect it. And you can trade just the best sector. You can leverage it if you wanted to. And you can short or avoid the bad sector. I mean, wouldn't that be great? So if you're in the right sector, you're going to have a huge year during this coming election cycle. If not, you could be stuck in mediocre returns. For example, in the last 90 days, I'm not kidding, 90 days, it might be 92 by now, but I want to show you the point I'm making. And this is without options. In the last 90 days, you've got the technology sector giving you 18.41%. In the last 90 days, the energy sector lost 9.46%. Again, one sector made 18.41%. The other sector lost 9.41%, 46%, sorry. The worst sector, what do I think the worst sector is going to be? The real estate sector. I finally believe real estate is going to start moving lower. Why? Long-term rates not responding to short-term rate cuts. We've seen that before, which means adjustable rates. If you have adjustable rates, then they might have already started going up. And you're probably thinking to yourself, hey, didn't the Fed cut rates just a little while ago? Yeah, they did about 2 months ago. But guess what happened to the long bond? Did not respond. Realtor.com predicts only 0.8% gain for real estate in 2020. That's the first time they've said that. It's always double, for the last decade, it's been double digits. And the worst part, sales of existing homes declined to the worst level in 9 years during the last report we've had. That's not pretty. So Top sector, consumer discretionary. Double-digit growth during first quarter of 2020. We're seeing it now. Remember, there's a lot of mix now between technology and consumer discretionary. So you kind of have to look at both of them together. Like Amazon, for example, is it consumer discretionary or is it technology? See what I mean? Or Netflix, is it technology or is it consumer? So there's like a very blurred line between those two. We're in the strongest labor market in 60 years. It's either 55 or 60 years, but it really doesn't matter because GDP is 2.1%. It's 0.1% on target. Phase one of the trade war is complete, which means that's not something that's people are talking about left and right. Interest rates are near historic lows. And even if they go higher, we're still going to be near historic lows for the next 3 years. So worst stock, Simon Property Group. I don't think this stock has legs to stand on. Why? Relative strength is underperforming the overall market. Earnings growth is declining annually and quarterly, and analysts are increasing their hold recommendations. That usually precedes a big downfall. Top stock. I know you're probably thinking, "Wow, Roger, you're getting really creative on us here. You're really, really creative here." Top stock is Apple. Why mess with a good thing, right? Consensus rating is outperform. Price target's $375 per share, which is conservative. The risk from China could be offset by gains from India, and a lot of Chinese companies are moving to Vietnam, just so you guys know. The wearable divisions like AirPods and Apple Watches are seeing massive growth. Now, imagine for a second, you can have the number one sector and the number one stock every 2 weeks. Every 2 weeks with actionable entry and exit, everything, giving you regular triple-digit wins like, well, 133%, CDNS, 141%, WEC, 276%. Now, that brings me to the number one strategy for 2020. As I said, markets are going to be nimble. Now, we've kept this in the vault for most of 2020. Why? Because we were in a runaway bull market and most sectors gave us good wins. So we didn't need to be choosy about our sectors. We didn't need to be as nimble. We didn't need to be as picky. We weren't in a fragmented market. Okay? Take a look at these recent gains. These are actual signals that we gave. We literally just closed these out a little while ago. The first one is the utility sector. Then you have consumer discretionary. Actually, no, you have the energy sector. Then you have, again, the utility sector. Look at the gains on these sectors. Now, let me give you a little barometer, something to compare to. Because you may be thinking, well, I'll just invest my money in the stock market. Well, not so fast. Over the last 20 years, the US stock market, the S&P 500, has given us 5.98% return on average over time, over the last 20 years, which means for every dollar you invest in the US stock market, you make less than 6% per year. I'm talking about making 428% in 2 weeks, 10 trading sessions. And again, these are not some hypotheticals. These are actual signal trade that our members took in real time. And they weren't day trades. You held them for 10 days. So you had plenty of times to see the profits build up. Now, I'm releasing this now because I know it will dominate over the coming election cycle. Because again, when you have a lot of political things going on, when you have China, Iran, all these things, you're going to see a lot of sectors subdued. But some sectors are going to go and take it all the way. And we want to leverage that. We want to be in the best sectors long and in the best sectors short, or avoid them if we can. So now I'm doing something insane to get everyone in at the most best price possible. Now, the name of the program is Alpha Rotation. Now, John Bogle, I don't know if you guys know who John Bogle is, but he started this little fund called, Vanguard Group. He calls it the Iron Rule of Financial Market. The Wall Street Journal says it's the most powerful law in stocks. Every 2 weeks, we predict which sector will win and lose. Now, pay attention. This is really important. Remember, S&P 500, less than 6% a year. If you invested in, there's two models, and we give you both. It's included. One is the aggressive ETF method, and the other is the options. You could trade ETFs if you have a bigger account, or if you're just starting out, you could trade with options. Let me explain to you how it works, and it's really important that you understand this. This is not something that should be taken lightly. If you started if you started with $10,000, you would have made 2,378% over 9 years. That's a lot more than 5.98% a year. A lot more. Now, if you trade options and you have a small account, how about clusters? 2 or 3 or 4 position clusters, giving you the best calls and the best puts with an average return over the last 9 years of 252%. How about that for every 2 weeks? Not 6% a year, 252% every 2 weeks. Those are what I'm talking. And again, this is not a new system. This is not what could have happened, what should have happened, what might have happened. This is what happened. This system is not, we've been doing this for a long time now. And again, we publish the returns every 2 weeks on our website. So the ETFs, forget about the options for a second. Let's talk about ETFs. For every dollar you invest, you make back $2.41. The accuracy is 73.56%. And this is not after like 3 trades. This is almost 1,000 trades. All right. So the average gain is 2.52%. The average loss is 1.96%. But you've got 73% win rate. Now you identify the sectors that are out of balance. You create targeted ETF and option clusters. Clusters is what hedge funds do. They don't trade individual positions. They don't put all their eggs in one basket. They trade clusters. It's a combination of fine-tuned positions. And we alert you when to take action. You can turn $1,000 into $24,780 just by doing something simple. $5,000 into $123,000. Now, folks, I don't know about you, but in some parts of the world or states, $123,000 is a down payment for a really nice house. So if you trade options, your potential gains is 10 times what you saw right now. For example, the market makes 5.98% a year. You make 346% on a bear position, limited risk in a raging strong market. Again, real estate sector, 81% in 10 trading sessions. Energy sector, again, short position, 97%. Again, we don't discriminate. We go long, we go short, all with limited risk options, calls and puts. We combine the power of position clusters and give you the opportunity to outperform the market. Every 2 weeks, I create a position that's completely fine-tuned for the current market cycle. For example, this is a real position that was taken. We started it with $10,000. You don't need to start with $10,000. You can start with $3,000 or $2,000. You could have even done this cluster with $1,000. The options here were like $200 each, so you need about $700, $800, and I'm overdoing it to buy each one. You could have turned and made 187%. That means for every $1,000 you invest, you make $1,870 in pure profit. Think it's a coincidence? No. And again, we had one put and 3 calls. There's no need to trade all 10 sectors. Take out the ones that are doing nothing, buy the good ones, sell the bad ones, and boy, you're going to see a lot more money. You turn $1,000 into $2,870 in just a few weeks. Again, it's not a coincidence. Here we have a call, another call, 3 completely different sectors, 228% return in just 2 weeks. And again, when I say 2 weeks, it's 10 trading sessions. You get the trade 10 hours in advance. Doesn't matter if you live in Singapore, China, Taiwan, Asia, Australia, Russia, Ukraine. It doesn't matter. This is not about who gets to the phone faster to make a trade. All right, 228%, 10 trading sessions. Again, you take $1,000, you turn it into $3,280 in just 2 weeks. It couldn't get easier, and your risk is limited. It's completely IRA friendly. Let's talk about every option cluster. The average option cluster over the last 10 years, the average 2-week cluster makes 43.29%. Remember, 10 days, 43.29% compared to 5.98% for the S&P 500. All right, percentage of winners, almost 75%. Now, for those of you who have a small account, check this out. This is so cool. Average winner, $1,128. Average loser, $215. All right. Think about that. Think about the leverage. That means for every dollar you invest, you get $5 back on average. You get huge win to loss ratio, all right? Huge win to loss ratio. All right, the average gain on the ETF is about $1.29. The average gain in an option cluster is $4.92 for every dollar risked. That's huge. And again, you're going to be right 43.29% accuracy. The gain is 43.29% for each cluster. And again, when you invest every dollar, you make a 4.98% return. That's big money. We make money in bull and bear markets. Again, we don't discriminate. If a sector is strong, if consumer discretionary is going to be a big sector of the year, nothing to worry about. We'll buy a call. If we're looking at the electrical sector or the real estate sector and we're expecting something really weak to happen, where we're not expecting anything to rise, we're expecting a sector to fall. Let's say earnings are bad. Let's say expectations. Let's say there's some political. For example, when this Iran little fiasco happened, this little 2-day war, oil took a dump. All right, we were short oil. We made a lot of money in it. You could have done the same. So, and for example, this is actually where I was going. 94% gain in a downturn. And again, this was in a raging strong market where the market overall made 31% return. You invested in 2 puts and a call, all limited risk. Doesn't matter what happened to the market, you were safe. 94% return in less than 2 weeks. 117%, not a coincidence. Here's another one, 117% in a downturn, a complete downturn market. Now, we're supercharging it. We're doing something we've never done before. We're also adding weekly sector stock picks. So I use my formula, my cumulative strength index, to also give you the #1 momentum stocks, and that's given as a bonus. That's not included before. Now we're including it. You get that too. These are also 10-day gains. Limited risk IRA friendly call options. No combinations, no spreads, no selling naked options, no income trading, no having to read options as a strategic investment, which is like 1,200 pages long. None of that. Simple 79.72% gain. You buy a call option, you come back 10 trading days later, you cash out with an 80% gain. 108% gain in 10 trading session. Now, this is something completely new. We've never done this before. Now, we've done the ETFs, but we're adding the sector. That's the first time we're doing it. That's new. Let's review. You get 24/7 access to your members portal. You get order entry instructions every 2 weeks. And again, this is not one of those programs where you have to sit in front of a computer. You don't need to do that. We give you email alerts and we give you SMS alerts. You get the getting started video tutorial guide. You get unlimited email support to answer all questions. You get daily position updates, you get analysis, and you get coaching. You get a portfolio spreadsheet that has all the options and the ETFs, and you get your options profits bonus. We want you to learn how we do this, so in case you want to ever do it yourself, we're going to give you that opportunity. You're going to get the opportunity to do it yourself. So, and as I said, if you want to learn how to trade bull markets with options, if you want to know how to profit with options during a market crash, if you want to know how to trade during a flat market profitably. Now, some of you just want the signals. You just want to be spoon-fed the simples. I get it. I totally get it. Some of you have kids, families, lives. Some of you just don't want to sit there in front of the market. I totally get that. I completely get it. So for those who want to do it yourselves, I've got you covered. Now, we're limiting this to 50 spots only. All right, there's only 50 spots today. We don't have room for a lot of people, and we're doing something we've never done before. Now, you get the video tutorial, you get the spreadsheet, you get your members portal, you get your position analysis and coaching, and you get unlimited email support. The value of all of this can easily be $12,782. I'm not going to do that. I'm not going to play games with you guys. I don't want to have 5 members here. I want to fill this up. I'm doing this for TradeThirsty. I want to make this worthwhile for everybody. So the retail price here is $5,000 per year. And you will see this on our website and I'll show you why. It's the best deal ever. Now, if you're one of the 50 admitted, you're not going to have to pay that. I'm not going to make you pay $5,000 today. I'm not going to do that. I didn't come all the way here. I didn't come here to Jeanette's to do that. I'm not going to do that to you. I'm going to give you the best deal. Now, you will see this for more than $3,997. But today only, for members, we're going to make the best deal ever. All right. Instead of $3,997, we're going to do something we've never done before. $997 for life. Folks, one time only. You will never, ever, ever, ever see this deal again. Please go to wealthpress.com/alpha. Do this now. Now, I'm going to tell you something. Typically, in the best case scenario, let's say it was the Christmas season, what we would do is this. We would take and sell this for $19.97 for 1 year, and then we would give you another year for another. Then we would offer you lifetime for $19.97, so you would end up paying $4,000, and that's in the best case scenario. That's the best case scenario. Today, you're not going to have to do that. You're only going to pay $997 for life. All right. So, all right. Do we have questions? Do we have questions? Huh? Can you guys hear me okay? Can you guys see me okay? Okay. Hey, David, how are you? Good. Guys, I'm serious. This is the best deal you will ever see. Under the best, what do I think about the oil sector? I think oil is going to go down, actually. Folks, take advantage of this opportunity, actually. Terrence, good. I'm glad you guys can. I just didn't see anyone asking any questions in the box. So I wanted to make sure. It would make me so mad if I found out nobody was able to hear me right now. No, we're not doing weekly options because weekly options expire. We're doing options that have see, we know when we're going to liquidate the options, David. So we're going to liquidate the option ahead of time, so we're never ever in a position where we have to lose money. In other words, the option is being traded as a proxy for the stock. I hope that makes sense. No, it's not a recording. Rama, I'm talking live to you right now. I actually had a video camera on, but for some reason I couldn't do the camera and my voice at the same time. I don't know why, but it is what it is. But Rama, I'm here. Hopefully that convinces you. There's no indicators. There's nothing here. There's absolutely nothing here that we simply give you the entry, give you the exit. We give you the strike price. We give you everything you need. Well, if you're not happy, Thomas, I promise we will do something for you. But I'm going to be honest with you guys. $997 for a year. You will never, ever, ever see this price again. Again, if I ever did this again, let's say during Christmas time, which I did this actually during Christmas, $1997 plus an option to buy lifetime for another $1997. You're getting $997 for life. We've had trades this year that have made over 400%, over 100%, over 150%, all this year. All right. Steve, we'll take care of you, I promise. But so far, no one's been upset. People have been very, very happy. And this strategy we've been selling for a long time, and it's one of the most solid ones to date. Do we show charts connected with trades in your analysis? Yeah, we actually give you daily analysis with feedback and everything, David. And you can follow up with us if you have a question anytime. And again, folks, I know that these 50 spots will sell out. I'm positive they will sell out. Go to wealthpress.com/alpha. Do this now. Promise me. You're going to get you're going to get 2 clusters a month. Yeah, it comes on 16 hours prior to the open. That's right. I don't know what your name is, but yeah, it comes out about 16 hours. So on Sunday, you're going to get a notice that says, hey guys, you're going to have to take action tomorrow. Then you're going to get a letter saying, okay, at this time, do this. And it's like 20 hours in it. So it's not like a surprise. There's no like, all right, you got to do this now or you're going to lose out. It's not like that at all. It's very every 2 weeks. You literally need to, we got 2 rotations every 2 weeks. So you get 2 trades, clusters every 2 weeks, like 1st and 15th of the month. And, during holidays, weekends, those dates change, but I'm giving you kind of I'm giving you like first of the month, 15th of the month. Like this week, we're doing rotation on the 14th. We're going to do it on Friday because it's 14th to the 18th. So we don't want to do it on the 18th. So we'll do it on the 4th. But I think you guys get what I'm saying. Why am I doing this? Because I've been invited to TradeThirsty because this is one of the best strategies. And I've been doing this for a long time. Steve, I've been doing this for a long, long time. I love doing this. I don't know if you could tell by my voice, if you see me, I'm really passionate about this. And again, this is not one of those strategies that maybe it'll work. This is battle tested. It's been tested. We have a spreadsheet of every trade in the members area. Yeah, every 2 weeks you get the top sectors and the stock in that sector every 2 weeks. And we just started doing the stock. That's brand new because a lot of people were like, hey, what about the stock? Do you hold most positions for the full 2 weeks? Yes, we do. About 98% of positions are held for 2 weeks. We're very consistent. We haven't changed any rules since we started. We haven't adjusted anything. It's exactly the same thing as what we do. Yeah, we do 3 or 4 depending on the cluster, and some are puts, some are calls. So we can always find 2 or 3 really strong or really weak next rotations for the next 2 weeks. And because they're clusters, you have less volatility. You're not putting all your eggs in one basket. And these are not NVIDIA or Amazon options. These are options that are $120 a contract, $200 a contract. So you don't need a huge account for this. You don't need a big account. You don't need to start with a huge account size. It's simple and it's effortless. We've been trading the strategy for 9 years, and every trade, or eight or 9 years, don't quote me, David, like 8 or 9, forever, for as long as I remember. And again, it's consistently outperforming the market. But this year, I think it's going to kill it because of how nimble I think the market will be. No, Rama, we don't give you free trades for first 15 days. We don't do that. This is the best deal we're ever going to give. We're going to fill 50 spots tonight. There's no anything free. It doesn't work that way. We're basing our profits on $10,000 rotations, but we're not basing the profits. We're basing it percentage. So the percentage would be the same no matter if you trade it with $100 or if you trade it with $1 million. Everything we've done here is percentage-wise. Rick, I don't know if you're in or not, but you should be getting a confirmation if you're in there. You should get a confirmation. Make sure you go to wealthpress.com/alpha. Do it now. Because we give you a limit order to control the entry price shalish. We give you we give you entry limit orders and tell you how to work the order, and we're there every step of the way. Roger, is this program higher win ratio than Lightning Strike? Lightning Strikes is a good one, isn't it? Yeah. See, all my 5 out of 8 programs that we have are making new highs right now, and I love it, including this one. It's totally different from Lightning Stocks. Lightning Strike is top momentum stocks. This is top momentum sectors. It has less volatility, less movement, but this thing kills it. It's been just killing it lately. I mean, it's just been destroying it lately, dominating it. Because again, this year I'm expecting a lot more fragmentation, overbought market conditions, a little more confusion, a little less directional bias. It's time to get nimble, folks. It's time to get nimble. We've got to get nimble. All right. So again, I highly, highly, highly recommend this program. When we've sold this before once or twice, we've gotten the best feedback ever. Jeanette said, "Hey Roger, bring me your best program. This is the best deal and the best program." This was one of the best sellers we had at Wealth 365 recently. I think every 10th person who was there bought it. I mean, it's a phenomenal success. We're very happy with it. It is something I've been proud of for a long time. And here's one thing, folks. It's one thing to create a program, see how it's going to do in the future. This has been around forever. This is not a new program. We're not reinventing the wheel here. And I haven't changed one parameter since I launched it. And it's killing it. And it's just killing it. So again, the next time you see this offer, you're going to pay $3,997, and that's in the best case ever. You're going to pay $1997 to join the 1 year, and then you're going to pay $1997 if we still offer the lifetime in addition to that. So in the best case scenario, you're going to be looking at $39.98 or $39.97. I'm offering it tonight for $9.97 simply because we're doing this for our friends. This is the best deal ever, folks. Do not procrastinate. I'm going to tell you something. The biggest factor that separates winners and losers is procrastination. If you talk to somebody who's on their deathbed, they'll tell you, I don't regret losing. I regret not taking more risk. People want to experience. They don't want to have regrets in life. Drawdown, Larry, I believe was less than 15%. Anastasia, what is the question? Can you give me the question and I'll answer it? I didn't see your question, Anastasia. Yeah, let me know what your question is. I'll answer it. Can you supply your last? It's in the members area. Ray, the spreadsheet, everything is in the members area. Every trade we've taken with options, with stocks, it's all in the members area. Folks, if you want to break away from working in a cubicle, if you want to break away from working for someone else for the rest of your life, if you want to change your life, change how you live your life, this is a good way to do it. So again, Anastasia, if you have any questions for me, please ask. Price of ETF, XLF going up or down? You're going to have to join the program and see. That's the best part. Seriously, Anastasia, go to wealthpress.com/alpha. Do it now. Gain an unfair advantage in the market. Don't procrastinate. Don't do. Again, I'm being told we're getting pretty close. This is not going to go on for very long. And I'm about to get, I know my time is almost up here. So folks, take advantage. I know there's a link in the chat box. Take advantage, follow the link, do this now. The markets, I believe the markets are going to be fragmented. Hey, Rick, glad to hear that. Yay, Rick is in. Roger, are there instances where there have been multi-losses week after week? There's always winners and losers, but overall, we've been very lucky. I don't remember how long the biggest drawdown was, but it wasn't very long, not at all. That's it, it's life. It's not 9,997, it's 997, Leon. Just one time. Thomas is in, yay! All right, folks, 997, one time for life. And again, you're going to end up paying 1997 for a year on the best case deal. If you go to the website, you're going to pay $3,000 or $4,000. If you go to our if you do this now, you're going to pay $997. No, it's just $997, Larry. That's it, $997 for life. Yes, it's that good of a deal. I know you're thinking, is this possible? Yes, it is possible. It is very possible. So yeah, we're only doing this for Jeanette. We're only doing this tonight. Please take advantage of this opportunity. You will not regret it. It's the best opportunity you will find. Do it now. Go to wealthpress.com/alpha, and there's no other cost. All right, D. All right, take care. Folks, again, if you have any questions, give us all. If you have any questions, we're going to be running out of this, but give us a call, 904-404-8870. Do it now. Come on, folks. I want to hear more questions. I want to hear from more of you. I see a lot of people in here. Don't be shy. I still have a minute or two. I want to answer your question. Let me know what's on your mind. But again, I highly recommend you take advantage of this before we sell all 50 spots. And again, you're going to pay $4,000 for this. You're getting $3,000 off. You're getting 75% off. This is the best deal you will ever see. Again, it's the best thing you can add to your trading toolbox, and we're only offering it for a very limited time to a very special group of people. So again, take advantage of this opportunity and do it right now. All right, let's talk a little bit about market action. Does anybody have any questions for me about the market action? No? Any other questions? I think we're good. Folks, really take advantage of this opportunity. You're going to want to take advantage of this now. Don't delay, don't regret it, do it now. And again, I wanted to tell you about the market's action. Somebody was asking me earlier about market action. I'm going to tell you, first quarter, I think we're going to see a nice little boost. Second quarter, I think we're going to see choppiness. And when we see that choppiness, when the markets become stagnant, that's when we really we're in. All right, Jack, I'm glad you're in. Thank you. All right, thanks, Jack. So again, Somebody was asking me about quarter by quarter. I think we're going to see better earnings, better numbers, but we're going to see some typically when we have election years, the markets can get a little wacky. But again, I don't think there's going to be anything here beyond. Does the boot camp cost to join? Yeah, the boot camp is different from this. The boot camp has more of my programs, and I do daily classes there, Tom. It's a little more involved. If you want to join, or if you want to hear more about the boot camp, give our guys a call at 904-404-8870. All right, I think we're done for this session. All right, John is in. Anyone else in? Is anyone else in? I know I was asked to tell a couple of stories, a couple of trading stories. I'll tell you an interesting story on volatility, actually. I've been asked this story. All right, Steve is in. Steve is in, John is in. Who else is in? Come on, guys, let me know. Don't be shy. Come on, I know you guys. Folks, I'm telling you, at $9.97, this is a no-brainer. I mean, think about this. Let's just for argument's sake, you use this for 5 years. 5 years, what, 365 days a year, times 5, you're talking about 2,000 days on it. You're talking 50 cents a day. I mean, 50 cents a day to change your life. That's a huge, 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 huge deal. All right, Dave is in. No problem, Dave. I'm glad. Anyone else, please let me know. John is in, Steve is in, Dave is in. Let's see here. I think Jack is in. I'm not sure. Thomas is in. We got a lot of people in. Come on, guys. Anybody else? Any other questions for me? Thank you, Haley. Love you too. Folks, did I answer all of your questions? VK is asking. Folks, Leon, I don't know if this has a money back guarantee. I'm not even sure, but I'm going to tell you something. If you're not happy with this, if you're not happy getting this program that's got over 400% returns this year for $9.97, I promise you, Leon, we'll make you good. I've got 8 other programs and they're all making new highs, including this one. I will take care of you, Leon. I promise you, I'll take care of you. VK, the offer is good as long till we sell 50 spots. Only 50 spots, and then it's over. As they said, no soup. Any other questions? Come on, folks, don't be shy. I'm here to answer all of your questions. I want to give you your money's worth. Let me know if you have any questions for me. Yeah, that's right, Michael. 400%. We've had 100 and something percent. We made over 100% in the energy sector, 400% in another, and this is options. You're not going to make 400% in ETFs in 2 weeks. That's impossible. That's not going to be possible. That's just not going to happen. But you will be able to make good stable. As I said, the average gain is 42, I believe 42, 43%, and the odds of winning is about 74, 73, 74%. So imagine over the last 9 years, 73 or 70% of all sectors, of all the rotations that happen within 2 weeks are profitable. And aside from that, you've got a 42 or 43% winner every time you do that. So that's pretty successful, in my opinion. No, not 400% for the year, Michael. 400% on one trade. On one trade. Yeah, on one trade. Folks, again, don't delay. Don't procrastinate. Go to wealthpress.com/alpha. Do this now. Do this now. Somebody asked me earlier why I do this. Yeah, it's really impressive. That's why I'm saying in the best case scenario, folks, don't think because it's $9.97, it's something that doesn't work. If you go to our website and look at alpha rotation, in the best case scenario, you will pay $19.97 for 1 year, and then you will pay $19.97 for lifetime if it's offered. The other services are not part of this, Leon, but if you join this, I'm positive our guys will give you a break on our other services. Give us, if you have a question about our other services, give us a call, 904-404-8870. But again, I believe, in my opinion, the alpha rotation is going to be the strategy to give us the best returns over the next 11 months. This is why I believe, I could have promoted any strategy, but I wanted to promote this one because I truly believe the stock market is going to be fragmented and it's going to become a little overstretched. And when the stock market becomes overstretched, it's like a rubber band. Okay? No, it's one time, Leon, one time, lifetime. We're giving it for lifetime. Usually you would have to pay $19.97 every year, or $19.97, and sometimes we give an offer for another $19.97 for lifetime, so it's $4,000. In this case, you're getting $9.97 for life. One time, Leon. Steve Marsh is asking, what other guides do you provide to make it more self-sufficient? We provide several getting started guide and a bonus option guide to teach you how to trade options with this method in the future, and to become self-reliant so that you can actually learn how to fish. So there's a lot of value there. The material that we provide is worth probably more than $1,000. So again, anybody else have any questions for me? Anybody else join? Let me know. I'll give you a shout out. Folks, again, you will regret this. You will regret this. At $9.97, this is the best deal you will ever find. I'm not kidding. You're going to hate yourself tomorrow morning if you don't take this opportunity. I'm telling you, $19.97. When is there is no, Tom, this is it. This is it. This is $9.97. It's 50 spots only. And I think I've already said, I think I've probably seen already 40 people take me up on the offer during this broadcast. So again, we don't have a lot of, oh, the next advisement. Sorry, the next advisement, the recommendation. I'm sorry. I thought you meant next advertisement. I'm sorry, Tom. The next recommendation comes out on the 14th. I was just talking to my guy about it. So you've got 2 days. We were going to do it either the 14th or the 18th, and we decided to do it on the 14th because it's just better to do it a little earlier. And again, that's what I mean by holidays, weekends. Sometimes the calendar gets messed up. But again, on average, every 2 weeks. And again, it may be on the 14th, it may be on the 16th, and maybe on the 1st or the 2nd, but it's every 14, 15 days. Typically 10 trading sessions. All right, any other questions? All right, folks, I had a great time. This was great. I had an amazing opportunity. I love doing this. I look forward to doing this again. Thank you, Jeanette. Jeanette, are you there? I don't think Jeanette's there. Let's see. Haley, have to ask in the past. Wait, hold on a second. Now I'm getting a lot of questions all of a sudden. Let's see here. In the past few weeks, I've joined Automatic Income, Jump. I've called, asked if you can something that would cover everything, but was told no, I'd like to join Alpha. You're going to have to give us a call, Haley. I would love to help you. Just give our team a call. They will talk to you, Haley. Yeah, 904-404-8870. And Tim says, I noticed in another one of your strategies, gold as a hedge in this market, which is the best gold or ETF. It depends. Haley, anytime after they're there 9 o'clock Eastern time, give them a call. They'll take care of you. They will take care of you. All right, folks, I had an amazing time. You'll get an email, Tom. It's all in there. It'll all be tomorrow. I'm sorry, Haley. I'm answering 2 questions at the same time. Tom, you'll get an email. It'll give you all instructions to get into the members area. And Haley, give them a call. They'll take care of you. All right, folks, thank you very much. I had an amazing experience. I'm going to check out now. I'm going to leave the page on the screen. Thank you very much. Have a wonderful day. And again, I'm being told there's just a few spots left. Take advantage of this opportunity. Do not procrastinate. Go to wealthpress.com/alpha. Change your life. Imagine a different life. This is your ticket to do that. At $9.97 for life, you will never find a better deal. Thanks, guys. Take care.